And we also have Anindya. So I want both on. Let's have Anindya on as well. And we'll do currency before equity. Usually we go straight to our equity guest. Anindya, good morning. Is it perplexing? I mean, the dollar index is down about 1% in the last 2 days. I mean, that itself is kind of large and unusual for dollar index to move like this. But on the other hand, you've got the rupee, which is making a fresh low even this morning. What's going on?
Yeah, very good morning, and thank you for having me. You're absolutely right. If you look at the dollar index, the USD-INR move is not making sense. But when we go deeper and look at what happened over the past 1 week or so, the U.S. bond yields have hardened. That's not just U.S. Even the Japanese, the bond yields have hardened, because of which what is happening? We are seeing outflows from the Indian bond market. So in the month of December, there are outflows that they have been selling in the bond. They have been, of course, selling in the equity. So overall, $2.5 billion outflow till now in December is basically weighing on the rupee. So the dollar index is not much playing out. It is the outflows which are playing out, and RBI is intervening, but in a very sporadic way.
Anindya, that's worrisome, what you just described. I mean, the equity outflow picture we've been, of course, mapping and tracking through the year. But this bond outflow, because it was, actually, whatever little money you were getting was in the bond market. What is your call? Could this exacerbate? And then what about demand coming in from importers? So what are we looking at? Absolute near term. I mean, we're talking today, tomorrow, absolute here and now.
Right. See, as long as the bond yields, because even the yields have continued to harden since last night in the U.S., even after the Fed rate cut. So that is not a good sign. And we have now the Bank of Japan. Now, if the yields continue to harden, and then I think we could see even more outflows from the bond segment. The FPI selling can happen there. Importers, they have been covering themselves, so there the risk is not there, but the risk is from the FPI outflows in the bond, and then, of course, the spillover into equity. And I think the RBI may have to come in heavily around the 91 levels, otherwise it can break through the 91.
Anindya, we thought that RBI would come in heavily around the 90 level because that was the psychological level, but that's been surpassed. And every day we're sub 90 and making fresh record lows. Have you had any conversation with RBI officials, even, off the record? This crawl-like depreciation, till what level will it continue? What is the comfort level now?
The actions are clearly spelling that they are comfortable with the current levels. The kind of, you can see it as, because the inflation domestically is extremely low. So we are taking the benefit of a weaker currency. If the inflation was high, then this would have not really played out well. But because we have a low inflation, RBI wants to give as much as possible support to the export sector. And so it's a kind of a trade war environment, and you are trying to use the currency as a tool.
Yeah, no, absolutely. Lots of economists have argued as well that, it acts as a bit of a shock absorber, the depreciation, especially in an environment like this. Anindya, the phone call last evening, I'm sure that on the currency side, which is a lot more sensitive to things like this, right? I mean, this kind of stuff is the lifeblood for at least people who are trading Forex. What's the reading? What's the read-through? There's not very much mention of, a trade deal or progress there. But of course, lots of other stuff mentioned.
Absolutely. If I take Commerce Minister's comments and things, so it looks like the trade dealers, of course, is going to come. But when, it's still not clear. So we have to wait for that. But it's so well analyzed and researched that we may not see a big impact from a trade deal. I think a bigger impact may happen if the Fed is forced to intervene in in their bond market, because they would also be concerned about these rising yields. They've already made an overture by saying that we are going to buy bills in the coming weeks.
In a way, Anindya, QE is back, isn't it? $40 billion a month.
Yes, if we leave aside the semantics, it is a QE.
It is QE, yeah.
I think the total quantum is 40 billion is in T-bills, and then buying 10 billion worth of some other kind of paper, which is what's going on. Thank you, Anindya, so much for joining in and weighing in on what's happening in the currency markets right now. You have a good day. We'll connect again soon.